Hi, my name is Felix Fry.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Fry, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. Mr. Marco.
Hey, Felix. Long time no see. Good.
Man.
You?
It feels like forever, huh?
It really does. Yep.
Oh man, it's been a wild 2 weeks I've seen here. Well, we have the thing is going to get wilder. We have the jobs report on Friday, and they're expecting another whopper. So Goldman Sachs has it at 1.2 million, and consensus is 900,000. Every time I look at this, and I'm saying the market gets excited because things are coming back to normal, but I mean. I think everybody's going to be a bartender and the world's going to get, I don't understand it. I don't understand some of these numbers and how, however, I get that there's so much money being put into the market and it's surely strong. You can't argue with price. The market does not go down. 416.5 is sort of where, where the level is on the SPY. It's held there. It's so there's something there. There's like a machine there. There's somebody big there. There's big money saying this is the level. Why? I have no idea, but that's been the level. And, and then you go through April where it just seems like the market's moving a lot, but, there's a lot of different rotations between the whole space. So it's been quite difficult to sort of call this tape here. But what I'm seeing, and I guess what I really want to talk about is, I've been wrong here on the social media names over the last couple of months. We've liked them for a long time. I love them. I look at them here and I think the world has gone nuts. Actually, I think the world has gone nuts with some of these names. This is a situation where there's a micro focus on, for example, you look at pins, or you look at Snap came off a little bit and it traded up, but then came off. But you look at Twitter and pins where they're talking about the monthly average active users, and I get there's going to be a reopening and people are going to go back to normal living. But, when you let's look at the market caps. Let's just start by looking at the market caps of Twitter, Pinterest, Snap, and I'm going to throw in eBay. Okay. Not social media, but I'm going to throw in eBay because it's a stock that I'm just going to throw it in there just for the argument's sake. Twitter is at about 43 billion, 44 billion, Pinterest, 42 billion. 41 billion. Snap is 94 billion. It's a bigger one. And then eBay, 38 billion. So let's throw away Snap for a second. So someone could buy Twitter, pins, and eBay for $120 billion. 110, give $130 billion. Yeah. It just seems not right. It just seems like something's not right there. You're talking about 1 billion users across the three or more, and yeah, there's some overlap, but it just doesn't seem right. Especially now, Facebook. We've liked Facebook. We it's the same story, right? It's like they control people, users. There's an old saying that Summer Redstone once said that content is king, right? Social media, in a way, is content, right? It's people go on there for entertainment to look, and content is king. They control the world, okay? But the prices don't say that, right? They control the world. Now, people think it's the backbone. Ultimately, the backbone, the Microsoft, the Google, and the app, they're going to fight against each other, which they are. And you know what? I sent you a link, Facebook versus Apple. And people should read this New York Times article. I think it was last week, but I read it and I just thought this is a great article, and it really highlights what's going on. And this is a long chess game, right? This has been a long chess game. It will be a chess game. And when you look at what Apple has done, it's really interesting. There's a lot of ramifications and nobody knows how it's going to play out. But Apple has basically said, you know what, we're going to take this privacy thing and we're going to really put it right at the forefront of everything. And that means let's try to understand what that means. That means that, first of all, Apple has 80% of the phone market, whatever it is. Like maybe it's higher. I don't know what
US, yeah.
I think it's 80% US. And so they have the App Store. And if you want to use Facebook or Snap or Twitter or Paint, you go to the App Store, you download it from the App Store. Okay. Now, all of these guys used to get this, you're on your phone, I'm on my phone. We have an identifier. And all of these guys used to take that identifier and they used to be able to track wherever we go. They can't track us anymore because Apple is basically not only has Apple said, okay, well, we're going to sort of, deal with privacy. They actually, if you download the app or you pop up into your app now, a pop-up comes up and it says, do you want Facebook to track you? A lot of people are going to say, no, that's silly. I don't want Facebook to track. At first glance, you're like, nah, no way. I don't want to be tracked, right? The problem is, and I'm not sure if people understand it, because the flip side is maybe people are not going to want that with time. But if you're, I talk to my wife and I say, what would you do? And she says, no way I want to be tracked, right? So she shuts off the track and I say, the ads you're going to get are going to be like, motorcycle ads, and it's going to be like, things that you don't want to see. Yeah, things you don't want to see, you don't care about, instead of things like, family stuff and nice things and house things, and what she was getting. So, it made her think a little bit, but at the end of the day, people don't want to be tracked. They want their privacy and they value their privacy, and Apple's making that the forefront. But to me, that's a chess piece that is really pushing, like that's an aggressive chess piece. And why do I say that? I say that because they control, they get to see everything because everybody's on their platform. But at the end of the day, Facebook is sort of saying, well, people are really on my platform. They're using your phone, but they're on my platform. And this is the fight, right? Because now Facebook loses the ability to, everything that you've done on Apple's phone, they can't track. They could just track what you're looking at on Facebook. It's a big problem. It's a big problem for advertising the business in general. Now, what becomes super important? You know what becomes super important? First party data, which means Facebook is probably going to be okay because they have great first party data. So when an advertiser, say you're an advertiser for a company, Coca-Cola, and you want to find people who drink Coca-Cola, Facebook is going to be able to give you a lot of that data of who the person is, who you're targeting. But if you're some other smaller business, you're not going to be able to do that. You're going to have to spend money just building your brand to find out yourself what's working. And it's a big problem. So the user becomes so important in this new game of chess. Apple's made their move. The user becomes so important. Okay. So I look at Pins. Pins has 400 million. I think it's 400 million users around the world. It's just ridiculous. These number of users that people have around the world. Snap, Pins, Twitter. It's in the hundreds of millions. TikTok as well. They are the gateway. They are that user becomes the most valuable asset on the internet. I don't think it's where storage is or that's all commoditized. Amazon, Google, Microsoft, it's all commodity. It's all commodity product. You buy chips, you put it on a thing, you buy servers, there, you store it, and then you sell it and parse it out. It's the user that becomes extremely, extremely important going forward. They are the content. It's, you have Netflix. Netflix is just a streaming service without movies, without TV, without, series. It's nothing. It's just technology. So content is king. And in this new world, content is really the content that we're developing here, the content that, that people are influencers are chatting about. They're putting out blogs, whatever it is. That's the new world. And it strikes me as incredible that if I'm Apple, because what's the race? The race is, you think Facebook is going to say, you know what, we're in trouble here because Apple owns the phone. Apple owns the phone. So how do we get around that? Well, at some point, these bigger guys got to say, well, we got to own the platforms, because over the next 10 years, if Facebook is going to play this game and they're going to push privacy, the chess game is going that way. In defense, we need the users. Facebook is just a phone. Without the apps, it's nothing, right? So I'm not saying this is going to happen or how this will happen, but if I'm Facebook and I say, well, what if we made a phone? And what if over time we put our app on the phone and kept our app? Everybody keeps their apps on Apple. But over time, Samsung allows more and more people to, they're doing things with Samsung, lower the price of the phones to allow people to get on the phone. And maybe Facebook, Google, and all these guys subsidize it. Or these guys just buy the user. But essentially, the only answer I see is that there's a new phone, and eventually the apps flip it on Apple. The apps say, we're going to go to this phone. And you could take our app off of your phone. So imagine Apple without Twitter, doesn't have Twitter, doesn't have Snap, and doesn't have Pinterest. Imagine that. And all of a sudden, nobody uses Apple anymore because they're going to go to the other phone. That's a defense. It's one of the only defenses I could see right now, because I think there's now going to be a race for platforms. I think it should be. I think that's the natural way this actually goes. Why wouldn't Apple go get the user? Apple's going to be scared that those apps, Facebook leaves. And you think Facebook, if you read that New York Times article, you think they're not thinking about ways to, how do we actually fight back? Just read that article. It's great. I think everybody should read that. And I think you should, in the context of reading that article, understand what's the next move. What does Facebook do? What does Pinterest do? What does Snap do? All of these social media companies have great data, first-party data. That's the new the first-party data is the new, gold, right? That's what people are going to need in this new world. Why? It attracts more advertisers. YouTube is in with Google. Google has the advertising engine. That's a huge plus. First party data, and they have the advertising, so they're going to win two ways. That's how people are going to win in this new world. Apple will need their own app where people are on it. Now, the next question is, well, why don't they just do it? Why don't Apple and everybody say it? Well, think about this. It's very, very difficult to recreate Pinterest or Snap or Twitter. It's almost impossible at this point. I'm not saying it's impossible, almost. TikTok was a big one that came out, started internationally, came into the US. But, it's very, very, very difficult. If it was so easy, people would have done it already. Okay. So in the context of this article, understand that and bring that into it and said, you know what? Can it be replicated? Well, I'll give you an example. Facebook tried to replicate Hobby. I try to replicate Pinterest with this app called Hobby. We're not talking about some startup that's like in Silicon Valley just came up and said, oh, we're going to, try to get people on this. This is Facebook. Facebook Hobby was downloaded, I think I read in the article, less than 10,000 times. Less than 10,000. Okay, less than 10,000. So we're talking about Facebook can't even get people to download their Hobby Pinterest killer app. They nuked it in 4 months. This should show you very clearly that it's almost impossible to recreate these things. It reminds me of LinkedIn. LinkedIn, if you can go look at it. LinkedIn in 2015 was trading at $250, trading at like almost $30 billion. By January, it had a bad earnings. It just missed. I mean, they find a reason why they just take it down. They took it down from, I think it was 2.25 in January to in February, it touched 100. Okay, it touched 100. Within 4 months, Microsoft in middle of June of 2016, they came in and bought LinkedIn for $27.5 billion. Okay, I feel that's the same thing that's going to happen here. Okay, when you're talking about Apple's made $1.5 trillion in the last, 18 months. They can buy any one of these. Now it's just which one do they want to buy. So I think we will be surprised within the next, call it 5 months, if these things stay at these levels and Apple and Google keep going up. To me, it seems ridiculous that you can buy, literally I can buy Twitter, Pin, Snap, and eBay for $200 billion. To me, that seems, when I look at things, it looks like it seems ridiculous. It seems undervalued. The same sort of logic I'm using with the railroads. We talk about UMP and how it trades well. Earnings came out, was down. Next day they shot it back up. It's trading around 225. But when they build out and they spend $1.9 trillion to build a 2 trillion, 3 trillion, whatever they spend to go build every wind farm and EV factory, whatever it is that they're going to build, they're going to need to build these little towns or cities. They're going to need railroads and trucks and things coming in. There's crates falling off ships in the Pacific Ocean, and nobody even cares. Everybody's like, well, whatever. It's 3 months late anyway. Leave it at the bottom of the ocean. And this to me, there's a lot of things that seem out of sync. The things that again, we've talked about EV cars forever. You know what? That'll lead us a little bit into Tesla in a second, because we're going to talk about that. But, let's go back to these social medias. I think now is a great time to, we talked about the strategy of buying calls with long calls. Okay, doesn't work. Now the stocks are down sharply. Now, if we look at the chart, let's look at something like, where are we here? Pinterest. So let's look at Pinterest here. And I'm looking at Pinterest going, okay, I can stocks down a ridiculous amount since right around here, 82. Stock shot up, looking for good earnings. Look, I looked at the Pinterest earnings. It's fine. They're going on monthly active users, and that's the reason why they're attacking it. The stock is trading 19, 20 times earnings. I get it, but I'm looking at replacement value. Warren Buffett's a big replacement value. Can you replace Pinterest, at the value it's trading? I'm going to tell you, I don't believe you can. And then on top of that, I'm going to tell you that I think in a year from now, you're going to see Pinterest as a huge ad machine because people are buying a tremendous amount. They missed the monthly average monthly active users by 3%, 5%, and or the coming estimates are a little bit lower. Okay, fine. Let's look out to something like September. If I'm looking at September options, I get the next earnings, and I'm looking at it. I'm saying, okay, in Pinterest in September, I was looking at the September 50 puts, right? So I can sell the September 50 puts at say 240, and buy something like what was I looking at here? 75.80, 75.95. Okay, 75.95 call spread is about, let's call it 450, 150 is about $3, and sell these 50 puts at like 240. That's about 60 cents. So for 60 cents, I'm going to get long Pinterest at 50. Okay, 50 is now 20% lower than we are. So that's going to value Pinterest at around $34 billion. Okay, 20%, about $34 billion. So remember, Apple and these guys, the buyers of these names are trading in the trillions, 2 trillion, 2.2. Apple has 80 billion in cash, right? Apple generally, but they haven't made a big acquisition in a very long time. $34 billion for Pinterest. I gotta believe that's worth a lot more money than $34 billion. But I'm happy to buy Pinterest at $50. So you sell the 50 puts at 240 in September. You buy the 75.95 call spread. So that's 240 and about $3. It's about 60 cents. So net, I'm getting long Pinterest at $50.60, which is, yes, if it breaks 60, it's a disaster. It goes towards the 50 and then towards maybe 40. But at some point, there's value in Pinterest, regardless of the monthly active users. You look at Snap. We got Snap trading. There's a Snap World thing coming up in the next 2 weeks for May. That's why you see May activity. But the stock is down here, and you're seeing people come in, and again, look, this is the quick game. The fact is, all these media stocks are under pressure. Okay, so this is the quick sort of people trying to play a bounce here and Snap. I tend to look at it and say, you know what? I think it's just going to need time, and I think we could be surprised, at some point down the future. And so, again, where do I want to own something like Snap? Snap is $94 billion, but they're growing a lot faster, and their revenues are growing a lot faster. So, it has probably a lot more to fall if it was going to go down, if they're worried about multiple times sales. So you're looking at something like let's see if somebody's actually buying these, or somebody looks like they bought these. Okay, so they bought the Snapple looks like they bought the Snapple 50 puts in October. I got to check to see if this was a buyback from this. So if people were short, I think a lot of people had been shorting calls and buying, shorting puts, and buying calls going into the number longer term. But they are buying these puts right here, so they got to be thinking towards 40. All right, so you say, all right, I'll buy Snap down $15. So that's 260, 250, call it. So sell 250, and I can buy the 65, let's call it 65.85. That's about 370, right? 375, 375 and 250 is $1.25. So for $1.25, I can be long Snapple at 45. Okay. And I'll get the 65.85 call spread, 20 points to the upside for $1.25. And I'll do that and just simply wait and figure that out later on. It's names that I want to own. Here, you look at Twitter, and as we're talking about it before, Twitter shot up a little bit today because there's rumors that Elliott is coming into Twitter, right? Elliott's savvy guys, right? They're seeing probably what I'm saying. They're long-term holders. They're activists. They look at something and they say, we can do this better. We're going to get long, and we're going to try to make some changes with management. So this is something that I think is also interesting. In the same way, when a guy like Elliott's coming in and they started pumping some money into the stock, it's not just them; it's going to be other people. So I think read that article, Facebook versus Apple, with the context that it's a chess match.
Yep.
Let's look over the next 5 years how that chess match is going to have to play out. It has to play out a certain way. Throw a what if there's a new phone? Somebody comes up with a new phone that does almost the same thing, but actually makes it subsidized by everyone. And it's something that attacks the average. Maybe it's not as popular at first, but at some point you get enough people there, and then you just you do what Apple did. Apple said, everybody come on my phone, we'll have the App Store. And then all of a sudden, out of nowhere, they just said, bam, we know you make your money off advertising. Now we just cut everybody off. That's a nasty move by them. That's like something like, out of nowhere that just comes up. Nobody thought they would do that, and that's pretty aggressive. So
yeah.
I think that the name of the game here is trying to figure out, maybe not try to figure out the exact winner, but maybe all four of them look to be sort of as a package. Remember, one of these guys gets taken out, and one gets taken out, and they're all up 15 to 20%, because that's when people say the value is in the user. Anyway, that's my call on these things. That's what I think. In the meantime, they're under pressure. In the meantime,
Yes.
anything trading 20 to 15, 25 times sales should be under pressure. Which then leads us right to DraftKings, which we've been talking about for the last few weeks. Stocks trading, multiple times sales. The stock, we were looking at it in the 60s. The stock traded down to 53. There was a buyer of the 55 puts and sellers of the 65 calls, 70 calls. And the only thought we had was somebody is doing that. My thought was that it was BlackRock, because they're probably selling stock. Okay. The 55, 65, 75 call spread selling buy put, selling the calls. That was giving us a signal that someone's actually actively selling stock. The stock traded down to 53. Okay, straight down to 53 at 62. We're talking about a 12% move. We're talking to 48. Okay, 53. We got earnings coming up. The stock is not trading. I think it's actually trading well. I don't want to say that it's not trading super weak. It's actually holding court. So if we look at let's see here, daily. It's holding serve here right around the 50. I mean, it did a good job right here. Okay. We were talking about it right here. And, but to me, it still looks like if this thing breaks, it trades, here. Right. So, there's a couple of ways to play this. This has been narrowing the 50, and you see the 50, the difference between the 50-day here and the 200. This line, right, has narrowed somewhat. You see it's narrowed probably by about 20%. Okay. So, this is either going to break this level 54, and it's going to be nasty in a bad way down to probably this level first 50, and then somewhere down here if it's really bad. Or it's going to recapture the 50-day, which is what the bulls want. The bulls want to see it recapture the 50-day so that it can go above and take out the 74. That's what the bulls are looking for. So to play it for earnings, I do see people messing around today in DraftKings. And what I would say is, what I would, if I'm want to be short, these still look pretty good. These are active. I think someone was selling that today, just to pare this position down. They also was selling some calls. I've seen some upside call selling. But I think that this one looks interesting. The May 21s as a put for earnings. And then on the call side, if you like the stock and think it's going to go up, I think you still have sellers at above 65 towards 70. And so I think you can go next week and try to capture earnings with the 59. I was looking at the 59, 64.5 call spread, or let's call it the 59, 64 call spread. What's that? 59, 64 is 5 points. Does that work? $5.70. All right. So 59 and 64, right? 59, 64, 5 points. That's going to cost you about $1.25.
Yep.
Okay. So it's going to cost you about $1.25. $1.25 to make 375. That's 3 to 1. Okay, so you're getting 3-1 on the 59.64. If DraftKings is good and the stock starts trading well and it's a big mover. I would lean towards the put side, but I know there's a lot of people love the name. This might be the spot where you switch from stock to long some calls, and you can move it down to the 58s too. 58s to the 63s are $1.50 to make 5. So 3.5, 2 1/4 to 1. So the 58.63 is also decent at $1.50, right?
Right.
So the point is, I think going into Friday, I think you're worried that the number is no good or that the number is just okay. Oh, an okay number is just not going to do it anymore for a lot of these stocks. So if the number is okay and the stock gets drilled because it's still trading 20, 25 times sales, that's not okay anymore, right? If they're doing that to the Pinterest, which are love stocks that are, have a lot of potential, Snap, Pinterest, all these, they're not going to stop and they're going to take down, a DraftKings just because it's too high of multiple sales.
Yeah.
Okay. So that's something to keep in mind. I would say in DraftKings. Let's talk about. I think one name that is, it's always interesting to look at and give people sort of, we had an earnings, and I wanted to show you. We had an earnings, and I wanted to show you what we were talking about. So on the, earnings weren't good. So they were good, but the stock traded off a little bit here. So we had this Tesla we're talking about, somewhere down here, not over a week or two, but if this thing starts turning, if the market decides to go lower, then, you're worried about Tesla shrinking down here. How would it get that, or why would it get that? I sent you an
video,
a video that I wanted everyone to see as well. It's just I think it's a great video. I actually think I don't know who the YouTube person is, but I think it's a good video, and it is it shows how the market caps of all the complete auto industry has changed since, I think it starts at 2007, Marco. I think it says right around
yes.
What does it start? It starts, move it up a little bit. Okay, so it goes from 2007 all the way to 2015, 2019, and it goes, and it's I would speed it up if you want. I sped it up to about 2 times, but essentially move it all the way up to 2020, late 2020. Can you move it?
Yeah, here it is.
Keep going. Yeah, keep going a little bit further. Let's go like December 2020, June, and November. It's like watching an ad. Okay, perfect. December, right around there. 800. There you go, right there. So January 2021, and I hadn't realized, I hadn't watched these types of videos in a while, but in January 2021, Tesla at 800 billion was valued greater than basically the whole auto industry. I knew it was somewhere around there, but this actually is a great illustration of it, and I think it's fun to watch and to see which ones are moving higher. Now it's April, May, and Tesla has moved back a little bit and the auto industry has moved up. Again, in the context of the whole world, in the context of EV, from the beginning, I've always said, it's not like the world is going to add 20 million new EV cars and still have the 50 million cars that they did. It's just simply going to take up 20 million EV cars are going to take up 20 million old cars that we use. And that transition is going to happen over time. If you have all of these companies that are pumping so much into the EV, either the pie has to get much bigger. The pie has to get much bigger, more than estimates, because there's already a lot of estimates built into this that the pie is going to get bigger. So you can't say, there's going to be more cars in China, there's going to be more cars in India. This is already counting in all of that. It has to be bigger than that. So either the pie has to get even bigger than what we expect it to get, or Tesla is going to have to give back some, and relative to the others. That doesn't mean Tesla has to go down, because if the pie gets bigger, Tesla could just hang there while everybody else moves. But I think it's something. I think it's interesting, and I think it's an interesting graph to look at, and something to be aware of as you're looking at this stuff. So we thought Tesla would pull back a little bit. The trade we offered on a pullback was the 640. 640, 550, 1x2. So I want everybody to see how that sort of played out and understand that the only way buying options worked with Tesla was with this strategy. It was like the only strategy that worked, but you had to take a little bit of risk on the downside. If you just bought puts, it didn't work. If you just bought calls, it didn't work. If you just bought put spreads, it might have not even worked there either. Okay, it depends on which one you bought. But the 1x2s were the only strategies that work. We gave the 640 in June.
Yep.
Just to give you an idea of how these things trade, to keep an understanding of it. The 640 puts in June versus, so these are now 34. So I'm gonna write that down, 34. Okay, and the 550s, the 640, 550 puts are about 11 and a half. Let's call it 11 and a half. So we're talking about 34 minus 11 and a half times 2. 11 and a half times 2 is 23. So that put spread is now worth $11. That 1x2 put spread is worth $11. Tesla down, let's call it 4% on earnings, 3.5%, 4% on earnings. The put spread to put on cost us about $7.
Yep.
So net, it's up about 55%. It's really the only strategy that worked, unless you sold calls or sold puts without anything, or you sold some credit spreads. Credit spreads probably worked okay. But besides that, we're talking about buying options. That's the only strategy that was going to work, and it's still there, and it still has a chance to work a lot bigger than it was. And now the ball's in your court on that one. It becomes a much better strategy here at the price you got at $7 than before. So I think that one, Tesla moves down to 600, market shifts lower, Tesla goes down to 600. That trade is going to explode from $7, probably more closer to probably $40. Okay.
Wow.
So these are the types of names that types of trades that I'm going to start showing you that in this type of market might make a little bit more sense. You got to play a little bit smaller, actually a lot smaller, because you're going to have to post margin. So you have to have enough capital to actually hold it, because you're getting, in that strategy, 640, 550, you're getting long at 460. So that's, you got to have some money to be able to be long at 460 if Tesla gets there in, call it 8 weeks. Mm-hmm. So something to think about, a name that, we're looking at and how to play these things and why we use those. I think that one is a good strategy. And I think going back to sort of the Pinterest, same thing. You could sell the put in all of those, eBay's, Pinterest. You can now sell a 20% out of the money put. You go out 4 months, sell a 20% out of the money put, and buy some call spread where you're paying $1 to $1.50. Instead of buying the stock, because the stock could be weak for another 2-3 months, until the next sort of earnings rotation, where people saying, oh, you know what, we should be getting long because it's good. They're going to show good advertising, whatever. But this is how you could switch it a little bit right here in something like a Tesla and something like these social media names by doing these types of trades.
Cool. Nice. Why don't we hop into Fisker a little bit? I've seen something happening there.
Fisker. Yeah, Fisker was, had a nice pop. We talked about Fisker a couple of weeks ago. People can go look at that, just jumping on YouTube and searching for the videos right up top. Let's see. Why don't you show me that video? Can you show that on your screen?
Yeah, let me just find it.
Yeah, find that and we'll show that. But Fisker, we looked at it literally right here at around, it was 12, and we were talking about like this level down here, probably 10. We were talking, I think, first probably 11, then even 9. And we were saying that, really, you want to let this sort of play itself out before jumping into these names. Otherwise, the reality is you would have jumped in, when you're on this side of the mountain, you're going to jump in here, you're going to jump in here, you're going to jump in here, you're going to keep jumping in. It's generally the human tendency to just keep jumping in and averaging down. But the reality is we were looking at, and we're seeing a little bit of it. We were looking at this sort of volume. We were looking at this volume, and we wanted to see the same type of volume over here. And we got a couple of days of it. We have a couple of days of it here. But I think this is going to another few of those days. You see this is 120 million shares, 100 million shares, 60 million shares. We need sort of this box to be over here for it to finally become, let's call it a bottom, in my opinion. Okay, so I'm concerned here. I think, we reached the level that we were looking at. We're looking at, this is a big level here. We talked about 14.5, 15. it rose up there one day and then immediately dropped back. We want it to be there and hold for a few days, right? You want it to cross this line and you want it to hold, and you want the volume to tell you. By holding, the market is saying, we like it here. We're going to buy it here. You see how they liked it here? They buy, they buy, they're buying at these levels. They're saying the market's telling you we're not letting it go down. So you can use that as a level of support. Trades up, okay, comes back down. When it goes through, you got to ask yourself, where are these guys? What happened to all these guys? How come they're not buying here anymore at 15, right? And so that's the concern. So the concern is that they sold already, and they've been selling ever since, and they're already almost getting out while everybody else is holding the bag right here. So it's important to for this stock to get above 14.5 and to hold. Give it 3 to 5 days of holding there, and you want the volume to be pretty good. That's going to show you Fisker is good and it's ready to move back up. In the meantime, this looks like a disaster. They caught the shorts had a cover here, and now longs are still selling. So we're right here again, same story as before. And you have earnings, I guess, coming up. Is that what we're looking at?
Yeah, around May 10th.
May 10th. So let's see here. Let's look at Fisker. Okay, so May 10th earnings and some put activity in this week. I don't know, probably selling, to be honest. But let's look over here. May 10th. So these are calls. Okay, looks like there's some call buying here, but the stock is going down. Okay, so stock going down with call buying. Not always what you want to see. And it's also just putting in 25 cents. It's not, looks like call buying. It's not a lot of dollars that are being put into play. So you got somebody just taking a flyer here, or is there open interest? No, somebody looks like they might just be taking a flyer here on Fisker. Down here, this is, let's see this, 12 cents, 13, 600, 106, 107. So we're looking at 108 vol yesterday, 108. So they came in, vol was coming in, they came in and they bought 15, bid 15, 16, 16, 16. Okay, so it looks like somebody came in, started buying some puts in Fisker, and they're buying for earnings. They're buying the 10 puts for, let's call it a quarter. Not a lot of money, really, but I think I think this is a good one as far as to think about, to watch. Like this is the one that you should watch it's going to show you when the bottom is, right? And maybe it's just you keep this on your radar to sort of watch. But I think when it's a bottom, you're going to see all this right here, this volume, right? That volume, you want that bottom to look like that. It's going to be a month of like 60 to 100 million shares trading. Maybe it's 10, 9, 8 or whatever, but there'll be a bottom like that. And that's usually how it is. You're looking for volume, big volume. These things don't end nicely. Okay. The right side of the mountain does not end nicely. It ends in big volume, huge volume, and the reason why it's huge is because people are tripling down, quadrupling down, quintupling down. It's just, they keep going because all that matters is, so if I'm averaged so far down, if it just goes from 12 to 18, I'm going to make, my money back in a little bit more. Then it goes to 10, you double more down. If it just goes to 17, 18, this is where you run into trouble. So I would say, look, in these names, be careful, be very, very careful, because people are buying into them here, which means they're going to sell them lower if it turns lower.
Now, talking about being careful, I mean, I've been getting a lot of questions. I'm sure you have as well about, how to treat trailing stops. Should we use them?
Yes. So trailing stops is super important, I think, in the strategy of the game. Let's think about it logically. I think logically it's important to understand the why. It's always, I could teach you, you can look at a certain scenario and then teach, and then you can say, oh, you do this or you want to do that. But I think the logical part of it has to connect so we can all understand how trailing stops are, why they're important, how they work. An option going from, let's use $1 because it's easier math. $1 goes to $2, 100%. Or goes to 95%, 97%, and then turns back and starts going back through the dollar and goes back down. it's telling you something, right? That the market making 100% move is a good move. Okay, you grab it, but remember the top guys in the world, they're using options for 150 to 400. So sometimes we're a little bit behind them. So they might be taking it at 130, 140 because they're seeing something or whatever. But maybe they take it at 150, and that is their 150, right? And we're just a little bit late behind them, and they're getting out. And the point is that when the market turns, if it goes from 1 to 2 and then turns back and starts going through 1 again, then the market is speaking that it's turned. And those turns, as you can see, they could take 3 weeks, 4 weeks. Any turn it takes a little bit of time for the stock to turn, to go down, find its level. And if it's a good stock and it turns back up, it'll find its level and make that turn. That could be 3 weeks on the downside, and then it could be 3 weeks just trying to recoup where it was, which is 6 weeks on a 3-month option. It's not going to help you. Okay. Right. So, and it might trap you to a point where you're like, and then you stop yourself at down 50. So the point is that what I try to do is I say, look, once you take that 100% or right around, let's call it 90, 110, whatever, if it gaps up, some are going to be 90, somebody 110, but you take that one lot off. If it trades down to flat, something has happened in the dynamic of the stock. The options are leveraged of the stock. So that means the stock has been trading off. Okay. And if the stock is trading off, maybe the thing has turned a little bit for, like we said, 2-3 weeks, which means to turn back, it's going to take another 2-3 weeks. So you want to be out of those positions. You want to just say, okay, the difference between hanging on and getting out is huge, right? Yeah. If you took a 1 lot and you have 3 lots, and you took 1 and it went from $1 to 2, and you take 1 off, right? And then the other 2 you take out at around flat. Let's call it around flat. That's up 30%, right? 35%. It's a positive win. On the downside, if it goes down, and you stop yourself out at 50, then it's a flat trade. Okay. So it's one of those, down 50 or up. But at some point, you could take half off. You have 2 left, so you could take half. But you should be moving, right? This is a dynamic game, and when these levels are important. So back from 1 to 2, you take 1, goes back to 1. You should be doing something. You should be taking either one of the 2 or all 2, and sort of let's watch and let's see what happens. You can always get back in. You're still at $1, right? And it's likely that you're not going to catch the low, right? Meaning you're not that. It goes from $1 to 2 to 1. It's likely that 1 is not the low. Okay. So you probably get an opportunity to get back in anyway, but you can look at it. The same thing when you go from $1, you take the $1 to 2, you take 1 off. It goes from $1 to 175 or 2. You could take the second one off. And then you go to the third, and it's something, for example, happened in Pinterest. You have a third left, and the stock has actually now turned almost all the way back to below 100%, getting near to, just flat. You want to be careful there. It's made a gigantic move up, and then it's made usually in a short time period, let's call it 70% of the time. Usually stocks don't, and you can look at this yourself. Stocks options don't go from flat to plus 200 to down 50% to plus 500. Usually that doesn't happen. When it does, it's because of some major announcement, something. But usually what happens is that they might trade around, they might go down. It's more likely that it goes down to a stop and then starts shooting up. And that just means that we were early in that trend. So that's why I also tell people to, when I'm showing you longer dated options, I'm showing you longer dated because I have no idea where the stock is going in the next 2 weeks. But this is a good stock. And eBay is a perfect example. I think it's a double. I think, we launched some OX 70 calls, and people that I talk to, we're looking at it and we're saying, well, you could have only bought 2 because the first one was a buy. The second was a loser. The second was a loser. And the third one you should be holding. And yeah, it's a disaster. So now you can either do a 1x2 to correct that, right? We can move it down a strike, but instead of having 2 options, we can have 1, right? But it's a lower strike. Or you could just wait and don't look at it, because I actually think that I even think the eBay 70 calls, could actually, they really have a chance to still work. I still believe that, right? But if you have a full position and you stop, there's nothing you can do. So that's why with these longer term options, I'm trying to, I always try to give people an opportunity to just hang tight a little bit. You have a lot of time. If you're only buying 2 options, buy 1. There's a lot of time. There's a lot of time between today and October. A lot could happen. Okay. And and that's all we're trying to do, right? We're trying to find good stocks, that have good stories and that have options volume that are looking in a certain direction, and play that direction. And so the trailing stop is very important. And then once you get once you get past 200, 250, the other thing that people should notice, when an option, it's hard. It's like the billionaire said, it's always hard to make your first billion, but then after you make $1 billion, it's like you just make billions and billions and billions more, right? Well, in options, when it's much harder for an option to go from 100 to 500%. But if an option goes from 0 to up 200 to 250, it becomes a hell of a lot easier to get to 500. That next 250 is much easier than the previous 250. One, because the delta is also in your favor. So if you're catching a trend, these things just start printing above a certain amount. We'd like to see that. Obviously, in the last 2 months, it hasn't happened. But these are the ones. And you look at UPS. Looking at UPS, it's like when all I was saying to people is, take it easy with this one, because it's June, and all we need is one little thing, because it's logical that they're not going to. UPS, let's just go to that, because it's the same logic. Same logic as the railroad, same logic. UPS is not going to allow every retailer to make a fortune, to allow all their market caps to go straight up to 50 billion, 100 billion, just because they're going to start selling more product and do 1 day or 2 day service. And they're going to say, we're going to buy UPS packages for cheap, and we're going to price it in. UPS is not going to do that. They're not going to do 90% of the legwork of getting the product to the customer and only take a small vig. They're not going to do that. If you were UPS as CEO, you'd be like, this is insane. If I was the CEO, I'd say this is insane. And then I'd talk to the FedEx CEO. I go, what are you guys doing? This is insane. Everybody's getting rich. CEOs are making money, and we're sitting here scrambling, trying to figure out how we get, Joe, our truck driver, to, this place to that place in 10 minutes. It's like, that's what we're fighting for. So, I think it's important. I think it's important to understand the longer term, a little bit longer term options is not about, it takes more strategy. It takes trailing stops, and it also takes a little bit of patience. Fair enough?
Yes. Thank you. That was good.
Good.
Awesome.
Let's see here. What else we got? There's a couple other ones that we should go through.
Yeah. Like Macy's, for example, if you want to take
Macy's,
a look
at. Okay. Yeah. Mm-hmm. That was one of my sheets here too. Macy's I've seen here looks like it's call buying in. You have earnings. So we have earnings coming out on a bunch of these. So people are looking to shift the risk reward to manage any downside. But Macy's had these two spikes. We've seen the two spikes. We've talked about Macy's in the past. They've come for calls. It looks like they continue to come for calls here, and looks like the 19 and a halves. Looks like they were bought in the morning. This was an odd one, because it looks like they were bought in the morning, right out of the gate.
Yep.
And then the stock jumped, and then all of a sudden it was. I think they might have raised the vol yesterday was 74, but then it's like you see it looks like it's selling here. So it's a little confusing, to be honest, because the volatility has come way down, right, from the morning, talking about a drop of 10 points, but it does look like these were bought right out of the gate. So I'm a little torn on this one, but I think in Macy's, we've been looking, and the price target has been that we've been talking about, that when people buying these calls, in the low 20s, right? Yep. In the low 20s, people consistently buying calls that are talking about the low 20s. So, I mean, if you want to play earnings here and maybe take a little, let me just see if there's a little bit of month in June. Let's see here. June. Doesn't look like I'm getting anything there. Let's try it again. Macy's. There we go. June. 18, 19. I mean, the June 18 calls don't look terrible.
Yep.
At $1.27, they don't look terrible, and you'd be playing just a little bit more time than, let's call it it's May 18th. So 18 calls for 1920. The 18 calls here, 87 cents. Look, I guess if you're going to play earnings, you can simply do the 17 and a half, 20 for 70, 17 and a half, 20 and a half for, let's call it 80, 85 cents. 80, I'm sorry, 70, 75 cents, right around 75 cents, 76 cents. 76 cents to make 2 1/4 is about 3 to 1. So if you like Macy's, that looks like an interesting play. The 17 and a half, 20 and a half call spread. Anything more, I'm trying to get that 17 and a half lower, and I'm trying to get 3 to 1 on that trade if that's what I want to do here. On the downside, 16 is obviously an important level. It breaks a 16. If I see here some volume here, but that this is on a straight. Just open it up a little bit. This is, I mean, only a computer seems like it's doing this. But you're looking at 19 and a half, 20 right around here. And this has been straight up with this flag. So you're talking about do it however you want. But this is sort of very flag looking, very large flag here. 19 and a half, 20, but a good number, reopening, everything else. All these other retailers have been trading well. Yeah, I would say the 17 and a half, 20 and a half call spread at about 75 cents, 76 cents. It's probably a good upside call spread instead of stock. Because if it breaks 16, and the thing is negative, it breaks 16, it probably hits closer to like before you get the buyers 14 and something. So, for 17 and a half down to 14 and a half, 15, that's $2.50, $3 lower. Whereas you can get out of that and buy the 70 cents call and make 3 to 1 on the upside, and then decide whether you want to be in a stock. I think that makes more sense.
Okay.
Right. Same thing we did with, just to bring up the same type of trade, we did that with AMD, right? We said, we don't know if it's going to break. Right now, it looks like it's going to break, but before, we don't know if it's going to break. And we're looking at trading, the stock's trading around 77, 78. And we're saying the 80, 90 call spread for 2 1/4 or something like that. I think it was 2 1/4, 250. I think it was more 250 is 275. You can buy the 250 for the 10-point spread. On the open here, you would have had a 200% winner, 150% winner approximately, and then it just shot straight down. So this is just better ways, to play that event. And then on the event, you could decide, okay, what can I do now? So AMD would have been take some profits here and now decide, do I want to stay long, which you probably buy a call or you buy stock. But either way, that's your decision at that point. The point is to get through that earnings. So in Macy's, we don't know where it's going. We're trying to get through that event. And I think owning that $3 call spread is probably better than owning stock here and watching it go to 14 and a half.
Okay. Cool.
Okay. What else are you seeing?
A similar one is IQ, same expiration date, same
Archegos.
earnings date.
This is the Archegos stock. Yeah. This is
yeah, look at that.
Yeah, they're buying calls here.
Yes.
Yeah, this is one. It's interesting. Call buying is interesting here too. You have a lot of, remember this does take a while to work through. This is a lot of damage, technical damage, which means, remember, people were buying here, they're buying here, they're buying here, they're like, what, before you stop buying, before you're or while you're still buying, you're still trying to figure out, why is the stock getting drilled like this? And Goldman selling you, Morgan Stanley selling you. And then Archegos blew up and they're long billions, and then it goes to 16. And then everybody's pissed off at Goldman and Morgan, but so have you. You're at 15 now, and people are buying which calls? Earnings are in
earnings 18
May
calls.
18th, so on the 21. So the 18 calls for 35 cents. Seems interesting. It definitely seems interesting. Are they buying these? I'm wondering why let's see here. Vol is going up a little bit. Volatility. 35, 40 cents. 35, 42, 40. Looks like a buy. I'm not 100% sure here. But I would say, I would lean towards a buy. So someone's buying these. They're buying these, and then let's see what they're thinking here. So you're thinking buying these for 30 cents, 25, 30 cents. What are they buying these? What did they pay? Dollar-wise? 30 cents, 40 cents. Okay, 35 to 40. So call it, yeah, about 36, 37 cents average. Okay, so 37 cents average gets you probably, they're thinking 21. That's a long way up. 22.
Yeah.
But, Netflix of China, this is a name that I think we were long back over here. I think this is, look, they were buying calls back here when it was, when it was 17 and stuff like that. They wrote it all the way out. Everybody got caught here. I think, yeah, it looks interesting. 18, right? 18 to, the 50 days up at 20. It's interesting. I would say, it's let's look at the other one. I want to look at the other, there was some call buying in this down here that nailed it over the last week. Although TAL eventually came out, they were buying these things. These are all Archegos type names that he was long. And then the one that we were looking at, Viacom, also here, right around here, we were looking at that 35 put. So, buying that trade. Stock is still weak. Again, a lot of damage. This is going to take. This might go back to 80, maybe 70. I have no idea. But anytime something does this, if it doesn't shoot back up quickly, it takes. I would say this is going to take 5 months to actually, figure out what the real story is and where people are at. So I would say IQ looks interesting. It's an Archegos name. People along the name, they've been long all the way down. So that means they're sellers on big moves up.
Yeah.
What else we got? Anything
Last
else?
one to wrap it up. Yeah, LUMN Technology.
LUMN?
Mm-hmm.
Aluminum technology. Interesting chart. I mean, I think you could see here what's happening, right? You have this move straight up basically from 8 down here to this 50-day. It's the 50-day. The difference between the 50-day is a little bit high. You could see it's been high here over the last month.
Mm-hmm.
Never really been that high across the board. Usually this happens like when it's high, they start the 50 and the 200 start meeting each other, right? And then eventually it ramps up and then it takes time for it to come down. So they're playing calls here, I'm assuming.
Yes.
Calls. Well, they're looking for a big jump. I don't really know the story in aluminum, but let's see where they think it's going. So we see what the charts are saying here. 16,000 on 13. Okay, so I'm looking at implied vols was about 39 on Friday, and here they're trading here in decent size. Looks like it traded on the offer to start, then it traded 57, 62, 59, higher vols right in the 40s. So it looks like vols went up and the stock was trading on the offer side for the most part before it was bidding. Yeah, I would say this is a buy, and the earnings are this week, May 5th, 2 days. You got a dividend coming up. You're looking at $15. Let's say 14 and a half. So they're thinking 14 and a half bucks. So 14 and a half to buy these here. Not bad. Not terrible.
Mm-hmm.
14 and a half, 15 bucks. It's got to break this. So this is what, if it breaks this on good volume, you could see the stock, I think, trade closer actually to 15 and a half, 16.
Nice.
Right. So I'm looking at 11 to 14 and a half, right? Within the triangle, within this flag, I'm also looking at 11 to 14 and a half around. So it's 3.5 plus 12 and a half is 16. So that's sort of how I got this. This is close to the high, 16. So everything seems to be working. You have two technical analysis sort of things that are working here in Lumen. One is the flag and the high here. And usually when it breaks the flag, it goes higher than this, but first stop will probably be right around here. But also this sort of, Elliott wave type of move going this way is working. You're also seeing the MACD has come way down. So from this spike, it's been, a spike here, tries to move up again here, followed it, and it's underneath, which is not great, but you know, one good earnings report up here, you'll start seeing this go up this way, and it'll gain that momentum back that way. So, you know, on the positive side, that's what they're playing here. 16, you know, 14 and a half to 15 and a half, 16. That's what I think. On the downside, though, I would just say it's looking more like 11-ish. You got to be worried about 11, right? Because it works this way too. You take this one and you just move it down here and it gets you about 11 and a half or so. So that's what I would be worried about there.
Okay, cool.
Is that fair?
Awesome.
Good. All right, man.
Yes, perfect.
Good first day back. How much time was that? What time was that?
A minute over. Only a minute over.
A minute over? Oh, good. Yeah. Perfect timing. Sounds good. All right.
And
we'll see you tomorrow.
I want to thank you, Felix. And I want to tell you that throughout these couple of weeks that I've been gone, I really realized how much I learned. And I hope you guys also have when you're looking at these things. I mean,
good.
It's a great knowledge that we can carry with us and trade better. So thank you, Felix. And thank you guys. Like the video, subscribe, and we'll see you tomorrow.
All right. See you tomorrow. Good.
Cool. Thanks.
Bye.